Profitable investment strategies in the U.S. real estate market. With scientific data, the U.S. real estate market offers diverse opportunities for investment returns and is a highly varied sector. To make profitable investments in this market, it is crucial to take strategic steps based on market analysis and scientific data. Certain regions in America offer attractive opportunities for investors in terms of both population and economic growth. For instance, tech hubs like San Francisco, Seattle, and Austin are cities that experience an influx of the workforce, driving up housing demand. According to research conducted by Harvard University, property prices show consistent growth in rapidly growing areas with population increase and economic development. Example, in Austin, Texas, the relocation of tech giants and the rise in remote work created a significant boost in the real estate market after 2020. Austin's population growth rate increased by 15% between 2020 and 2023, further driving up housing demand. This area has become an appealing choice for investors seeking rental income. In the U.S. real estate market, there are two main strategies: earning rental income and capital gain. According to a study, it is more beneficial for investors seeking long-term rental income to invest in cities with high rental returns. According to the National Association of Realtors, NAR, data, some cities in Florida, especially Miami, have a rental increase rate of 10% annually. This presents an attractive opportunity for rental income-focused investors. Example, in cities like Miami, Orlando, and Tampa, the high tourism and workforce concentration result in high rental yields. Such an investment offers a strategic advantage for investors seeking steady income. In recent years, commercial real estate investments have become more attractive in America. These types of investments tend to offer higher returns but also require more substantial capital. According to research by the National Bureau of Economic Research, NBER, commercial real estate returns can be higher than residential real estate, but they require larger capital and effective management. Example, purchasing a commercial property near tech hubs in San Francisco can generate high rental income due to the demand for office rentals from companies. These types of investments create attractive opportunities for large capital investors. When investing in real estate in America, macroeconomic indicators such as interest rates and tax rates are decisive. For instance, when the Federal Reserve raises interest rates, mortgage rates also increase, which tends to reduce property demand. However, during periods of low interest rates, mortgage loans for property purchases increase, creating higher demand in the market. According to a study by Bank of America, during low interest periods, investors tend to prefer mortgage financing for property investments. Example, during the low interest period of 2020, mortgage-backed home purchases across the U.S. increased by 50%. Real estate investments made during this time allowed investors to own properties at lower costs due to the favorable interest rates. Some regions in the U.S., known for population growth and technological developments, are considered emerging cities for real estate investment. Cities like Phoenix, Arizona, and Dallas, Texas, with rapidly developing economies and high employment rates, offer attractive options for investors targeting long-term capital gains. Example, according to the U.S. Census Bureau, Phoenix saw a population increase of over 20% in the last 10 years, which led to a similar rise in property prices. The region's growing economic infrastructure and employment opportunities have made it a promising area for real estate investments. There is a growing demand for sustainable real estate projects in the U.S. Environmentally friendly and energy-efficient buildings in the real estate sector tend to appreciate more in value over the long term. According to the Environmental Protection Agency, EPA, eco-friendly buildings have the potential to gain 20% more value than standard properties. This creates an attractive investment opportunity, especially in states offering additional incentives for sustainable projects. Example, making sustainable real estate investments in eco-conscious states like California is crucial for long-term value appreciation. Investments in environmentally friendly projects have the potential to provide both rental income and value growth. Investing in real estate in the U.S. requires knowledge, patience, and the right strategies. Whether investing in residential or commercial real estate, selecting the right region, analyzing economic indicators, and creating an investment plan supported by long-term projections can increase your chances of profit. Remember, real estate investment requires adaptability to changing market conditions. A well-researched investment plan, supported by economic data, can open the door to financial freedom in America.